What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Tuesday, July 30th, 2024. And you know what we're doing here, folks. This is how we traded spot today. But before we get going, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is just about every day. A little bit late today, folks. Had a chiropractor appointment. Also, don't forget to leave us a comment. We love those comments, folks, and I respond individually to each and every one. Also, please share with your trading community. And here we go. We're going to go right to the chart. So, folks, we are looking at, I got a bunch of levels on the chart today, folks. So, pre-market high, got pre-market high sitting at 546.26. And that happened really, really late in the pre-market, folks. I mean, so it was the last couple of minutes of pre-market. We finally hit that pre-market high. I got pre-market low sitting at 344. So right out of the gate, I'm thinking, okay, I've got, it's $2.25, folks. If we get $2.25 on a day like today, we will take it all day long. Now, today is Pre-FOMC day. Now, my least favorite day of the trading month, and there are about 9 of these every year, is FOMC day, because quite frankly, it's just the volatility is off the charts. We've done volatility plays before and done very, very well, just playing volatility, not playing the chart. Buying 100 contracts, that kind of thing, and then just watching the volatility increase, so the value of the contracts necessarily goes up too. So we've done very, very well playing volatility. But as far as just price action, it gets very, very, it's volatile. It's very, very volatile. Jerome Powell can say one thing and it can go against your position. I mean, just that fast. So it's my least favorite day. I like CPI day. I like PPI day, but I also like pre-FOMC day because we tend to get really, really really good moves. I look back at the last one, we had about $5 worth of movement that day from the top to the bottom. So, and I'm looking at $2.25 in pre-market. And again, folks, that kind of movement, there's plenty of movement in $2.25 to do very, 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 very well. So now I do have some levels. I've got yesterday's high up here, 547.05, yesterday's low, 542. So I've got $5 there, and I've got got a gap down here at 544.76, yesterday's gap, and these other 30-minute zones, folks. So let's get into the trading day and kind of see how this thing played out. So right out of the gate, folks, right out of the gate, look at this. It just ran up. I had people ask me in the group, they said, are you going to take this to the upside? And I said, no, I'm not taking it to the upside. Number one, because I like to have a fresh cross. Really, really like to have a fresh cross. We saw a lot of volume on that first candle, though. We saw well over 1 million shares. Folks, when we have something like 1 million shares traded on that first candle, that's really good. We're looking for 500,000, 600,000, 700,000. A couple 100,000, generally speaking, does not do the trick. But over 1 million, yeah, you can kind of think, okay, it's going to be at least a moderately decent day. So let's see how it did today. Again, the breach of yesterday's high did not take that. Had some of the people in the group took that play. Again, a breach of yesterday's high. But again, I didn't take the breach because we were still pushing up. I didn't take this next candle down because look at this wick. We wicked inside the 9, and I wait for candle closes. This next candle, so we're talking 15 minutes into the day, 15 minutes into the day. I had that big wick down to POC and VWAP sitting right in here, folks. So again, I didn't take that. Next candle down, I said, okay, we breached 920 VWAP and POC. I felt like I had at least a decent chance of doing something down here. I was just looking for a quick scalp down to this 545.72. So we got a decent run. We had 60-something cents in that move, and there it was. And again, I didn't mean to do that, but there we go, folks. So again, look at this run back to the downside, folks. Look at this run. And you can see I'm giving it away right here, folks. I'm absolutely giving it away. Run to the downside. I did not catch this right in here. For whatever reason, I missed this play right in here. Candles were not doing really, really nice things in here. It was kind of going up and down, up and down, and up and down. But again, again, didn't take this cross to the downside. But I said, you know what? If we can take out this gap, I'll take this for a really quick scalp. And I did. I took it for a quick scalp. Now, I kind of thought we'd take out pre-market low. I did this one day last week. We took out pre-market high or pre-market low. We went the opposite way. I kind of thought we were going to get a little V out of this play right in here. So I took this play back to the upside when we breached this gap with the expectation that maybe we'd make a VWAP run. But we didn't. So the result of not doing that was obviously it was a losing trade. Folks, I don't care about losing trades. I care about the execution. The execution, in my opinion, I think it was well executed right in there. And I really do, again, because we're pushing up a little bit and we got through this level right in here. I thought we were going to push up, maybe take out VWAP. We did not, took the loss on that. And folks, it's okay. We just execute according to our trading plan. That was according to my trading plan, took it to the upside, ended up a loser. This next play back to the downside, oh my goodness, this was the Moab, the mother of all, well, not the Moab, but it was a really, really nice play. The Moab being the mother of all plays. It wasn't, but it was a really, really super, 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 super nice play back to the downside, folks. So again, we got this cross to the downside. I waited until we breached this level right down in here. Again, pre-market low, got a breach down here, and then I just sat back. And I'm talking to all my guys through the particular play. And I said, folks, and I again, we talked about this one day last week, but one of my main responsibilities is to help people stay calm while they're in the trade and also call out what I'm seeing. So if I can do that and help other people while they're in a trade and call out where I think would be a good place to, get in, get out, and this kind of thing. And again, not financial advice, folks. This is just trying to help people here. But again, not financial advice. Play at your own risk. But again, play back to the downside here, and then it just started dumping. I mean, this was a beautiful drop. I mean, 43.87 down to 41, $2.50. I thought we were going to get a little bit more push down. I was looking at this level down here, but alas, it turned around, and I closed when we breached this 9 back to the upside. It really started to move pretty good against me. Now, this next play back to the downside would have been another really, really good play to the downside. But for whatever reason, I missed it. I think I stepped away for a few minutes, like I do about this time in the morning, and missed it to the downside. But folks, look at these plays. Look at these plays. And now we just kind of bounced around. I think I came back right in here, somewhere right around in here. And I said, okay. And I remember specifically what I told the people in the group, because we had this cross down right here. It didn't really do a whole lot. So we're in here. Where price action is right in here, about 12:44. So a couple hours into the trading day. And I said, okay, folks, here's what I have seen. And we see this to the upside and we see it to the downside. If we don't do anything that first cross to the downside, so we got a cross to the downside over here, it's generally either the second or the third cross that kicks down the door, and it does really well either to the downside or back to the upside. But I mean, look at that thing. I mean, it was just a really, really nice play. And again, I just thought we were taking out other levels down here, so waited until we started pushing up just a little bit. I wanted to make sure that at least this part of the play was over. At this point, folks, we are, what are we, 3 hours into before close? And look what happened. We had a beautiful, it was almost a V-shaped recovery. I mean, we dropped $10, folks. We dropped $10. I mean, we can go to the high. Look at this. We dropped just about $10 down here, $9.50, $10 to the very bottom. And you figured, it was going to V at some point. But I tell you what, let's look at that 30-minute chart and see what we're looking at on the 30-minute chart. Okay, so this line was not here. This line, it was absolutely not here. I put it in here because, again, this is a level that we made. What I was looking for was I was looking for this level down here. So I was looking for 538.14 on this run back to the downside, and then a reversal out of this zone right here. Again, this level happened a week ago, so just about a week ago, the 25th of July, so it was last week. Beautiful, beautiful, beautiful demand zone right in here, folks. Again, this is your 30-minute zone, and I've got all of these mapped out throughout the day. But again, I thought we'd get a little push down, but we didn't. But consequently, it just ran and it ran and ran. $9 or $10 drop to the downside. And then a nice little run to the upside. At this point, it'd been a really, really, really good day. And we are, 3-4 hours into the trading day already. And I thought, you know what? I will wait to see. But again, this play right here, out of this demand zone, missed this right here. But again, we picked up enough buyers at this level to push it back up, volume today was really good today. And then just ran and it ran. So we're getting late into the day at this point. And I thought, you know what? I didn't play here, obviously, because you don't see a smiley face or a frowny face. I played the cross right here at 1544. So this cross at 1544, look at this thing. Really nice cross to the upside. It was a double cross and it got me through a level right here. It's a pretty decent sized candle. So we got 53 up through 98. So we got a 40 or 45 cent candle, folks. If you're playing late in the day, keep a super tight stop. The only reason that I took a trade on a 40 or 50 cent candle is because it breached this level. So this 541.92, that's what I was trying to breach. My expectation, well, actually the only expectation I had was that once I put on the trade that it was going to do something. But I liked this pattern that we saw over here. Kind of thought we'd get a little pushback to the upside, see if we can make that VWAP run. But again, double cross to the upside over this level, 541.92. Took the trade, was in it for 3 or 4 minutes. It turned around on me almost immediately. It was nowhere close to being in any danger. Obviously, I was upside down on the trade. But it wasn't any kind of big deal at all. My target was VWAP, and that was it. I wasn't really interested in taking it any higher, although it did run up. But late in the day, folks, have targets. You should always have a target, but particularly late in the day. By having that target late in the day, once you hit that target, take the trade off the table. And again, this was a really nice trade. We got 99 through 70. We got about 70 cents worth of price action in about 5 minutes. And that kind of price action, folks, that does really good things for the old P&L at the end of the day. But that's how she played out today, folks. Just look at these trades. Just left and right. There are a lot of people that have a hard time with days like these. And we talk about these trending days. So we trend it down, then we turn it back to the upside. A lot of people have a really difficult time with these trending days because there's something in them that says it can't go lower or it can't go higher or something like that. And it's a psychological thing. Trading is difficult enough, but when you throw those types of things in there, that there's no way it can go lower, or there's no way that it can go higher, it makes trading that much more difficult. But to always trust yourself, to trust the process. That is going to be, again, critically important. And always, folks, always trust your higher time frame demand zones down low. Look at these demand zones. And your supply zones up top. Please, folks, please trust those areas. And look at all these lines on the chart. Oh my goodness. Let's look at a clean chart. Okay, so this is SPX. Look at what SPX did today, folks. This is just a 920 in action right here. That first play out of the gate for SPX. Look at this thing. When the 9 and the 20 finally caught up, look at that. It was just banging all the way back to the downside, folks. But again, this is just a cleaned up version of what we're looking at on SPY with all these lines. But we like these lines here because they're major levels. They're absolutely major levels. So number one, recommendation, execute on the 1 minute. So get into those trades, take your surgical entries on the 1 minute. Once you're in a trade, switch over to a higher time frame, folks. You can watch that 5 minute, see what it's doing on the 5 minute. Again, this is the 5 minute from today, and then it ran back up, ran back down. And check those higher time frames for your higher time frame levels of support and resistance, and then only take trades out of 30-minute demand zones down low, or 30-minute supply zones up top, or something like the POC. You can play it off of POC. The thing we don't want to do is, generally speaking, we don't want to take those trades that are called kind of diddling in the middle, where you take those positions not close to a major level. By taking those plays close to a major level, you can better predefine your risk. And that is law number one is to protect your capital. But it's hard to protect your capital when you're taking a position and it's 30, 40, or 50 cents away from where you need to stop out. Sure, you're going to get a rogue candle every now and again that takes you out, and it's a big loss. But the better you can do at taking your plays directly by a 30-minute demand zone or a 30-minute supply zone, the better you will be as a trader. But anyway, folks, tomorrow is FOMC day. So it's Federal Open Market Committee Day. It happens, I think, 9 times a year. It's either 8 or 9 times a year. And that is where they set they're going to come out and say, my expectation tomorrow is they're going to come out and say, we're not going to do anything with rates. So interest rates, I don't believe that there's going to be an interest rate cut. I certainly don't believe that there's going to be an interest rate increase. That would be crazy. You want to see the market just go absolutely bananas. Increase interest rates. Increase interest rates. I don't think they'll do that for a number of reasons. Number one, they're looking at the economic news and they see it a lot differently than most people do on Main Street. Remember, folks, Main Street and Wall Street are two totally different things. They don't see it the way we see it, folks. They don't have the same pain. But again, they look at it differently. And that's okay. That's okay. But yeah, but again, I don't think they're going to have an increase. I don't think they're going to have a decrease. But again, FOMC day tomorrow. So generally what we see on FOMC day is not a whole lot of action early in the morning. So not a whole lot of action early in the morning. And then they'll have the federal funds rate announcement at 2 o'clock. So at 2 o'clock, you're going to see the algos kick in. So if this is your first FOMC day, what I want you to do is I want you to sit on your hands. Do not, I repeat, please, please, please do not trade around the time that the announcement is made. Again, 2 o'clock Eastern time. And do not trade at 2:30 when Jerome Powell, affectionately known as J Powell, when J Powell gets on the mic. Please, please, please sit on your hands, folks. It's okay. It's okay to sit out FOMC day. Now, you'll see those crazy moves and you'll think, oh my goodness, I wish I was in that trade. Well, you get trades every day, folks. Remember, trading is like a bus. If you miss one, you get another one that comes right along. But again, folks, that's how we did it today. That's how she played out. That's how we traded SPY today. Overall, very, 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 very good day. If you had patience and waited for your setups, the setups were there all day long. But again, thank you. So if you like our videos, please go ahead and give us a like and a subscribe. And you know the thing about notifications, please turn them on. Also, leave us a comment. We greatly appreciate the comments. And share with your friends, neighbors, family, and trading community. It's kind of a big deal. But again, thank you for getting us to over 1,000 subscribers. We appreciate that very much. Now, if you are interested in live daily trading, again, folks, this is where the rubber meets the road. Live daily trading. You can look at all this stuff and go, oh, okay, I'm learning how to trade. But until you really do it, there's nothing that can simulate real trading. So if you're interested in learning or live daily trading, head on over to Trading Decoded. The link for that is down below. It's down below, folks. We talk about every single one of these setups, whether I'm in the trade or not. We talk about all of these setups and what I like about the setups and what I think is going to happen. I mean, we do that kind of stuff all day. But again, folks, it's not financial advice. It's just based on time in market and watching and trading. So that's what everything is based on. And plus the 920 is a really good plan. So again, Trading Decoded, head on over there. We're going to give you that first week for free. If you like it, great. If you don't, hey, that's fine too. Now, if you're interested in 920 crossover strategy, and again, you can look at any day and you can put the 9 and the 20 SMA up. And look at this, folks. There are plays every single day. Do you have losses? Absolutely. You are absolutely going to have losses and probably every day. Probably every single day, folks. And I hope you have losses because if you don't, you're not taking any trades. But execute, celebrate the execution. Again, if you're interested in 920 strategy, head on over to 920trading.com. All of the information is right there, folks. You don't need to spend thousands of dollars on some super secret strategy that's neither super nor secret or any of that kind of stuff, folks. But again, if you want to see all that in action, head on over to Trading Decoded, folks. Again, first week for free. If you don't like it, no harm, no foul. That's what price action is doing right now. Again, after hours trading. But again, folks, that's how she played out today. FOMC day tomorrow. So again, thank you for spending your precious time with us, folks. Again, your time is your most precious commodity. We all have an expiration, folks. We all have an expiration. Some of us a little bit faster than others because we are maybe a little bit more advanced in age. But nevertheless, thank you for spending some of your precious time with us. We greatly appreciate it. We're going to do it again tomorrow. But again, folks, FOMC day tomorrow. If you don't feel like trading tomorrow, don't trade tomorrow. But again, I hope everybody has a great rest of the day. And we will see you in the markets.